trade, which is so important, of course, for sustaining growth all across the globe, has been slowing down very significantly. The expectation now is we may see just 1.2% growth in world trade, which of course affects everyone to a considerable extent. And we've seen that, of course, in Europe too, with Germany in particular seeing its own orders going down for a number of months now. And of course, it has effects all across Europe too. But that has always been the greatest threat in terms of world growth. And the IMF has been talking about this for quite some time. Other organizations have done the same. They've all been downgrading. Every time they produce a forecast in the last, I would imagine now, a year and a half, we've seen that highlighted as an issue. And with trade tension still there between the US and China, whatever it is that we hear about a possible sort of truce and a new phase one being agreed of some sort of half agreement, if you like, or half trade deal with China, the world still needs to be convinced about that. And what's happening, unfortunately, in the meantime, is that business confidence is going down. If you look at the OECD's business confidence, which is the Organization for Economic Cooperation and Development, that's been going negative for some time, in the sense that we've seen business decline in the developed world, business confidence rather decline in the developed world, and with it, investment really slowing down. All this together, it's hardly surprising that the world economy is suffering.
And this figure, the US-China trade tensions, could reduce the level of global GDP to 0.8% this year. Is that the crux of this? Is that the centre of all of this worry, do you think, the US-China trade tensions?
What most organizations assume is there will be some sort of deal. We're not going to have a sort of disorderly sort of trade war breaking up. But if there is one, then obviously the prospects for growth are going to be even less than would otherwise be the case. But the interesting thing is, if you look at what's been happening, is that on the monetary front, so there's been a lot of help. Interest rates have come down. And the fact that interest rates are coming down everywhere is also a sign of global weakness. But the monetary authorities have helped by doing quantitative easing. The European Central Bank is starting that again now after a period of not doing any, because the economy in the Eurozone is stalling. We've seen interest rates go negative in Europe, again, even more negative than they were before. One particular interest rate, that is, where the banks deposit money with the central bank and they get penalized for doing so. So they might as well go out and lend. We've seen that in the US with the fall in interest rates there too. There's a talk here in the UK of possible cuts in rates, irrespective of whether we live with a disorderly Brexit or not, because the economy needs it. So without monetary policy being quite expansive, we probably would have seen a lot less growth in the world economy anyway.